Good afternoon, traders and investors. It is Tuesday, the 11th, the day before CPI. Hope you guys are ready for tomorrow. I myself always use these days, always usually CPIs come on Tuesdays or Wednesdays, and the Fed meetings as well as come usually always on Wednesdays. So I kind of try whenever there's a week coming up like that and I'm writing options, I try to write them Thursday or Friday of the week prior and try to close them as much as I can Tuesday or Wednesday morning prior to the meeting. So that's exactly what I was doing today, winding down some positions, which leaves me some open room for some buying power. Regardless of the outcome tomorrow, we're going to have some good volatility. And as traders, especially options traders, especially if you're writing premium, guys, you really want to be around and have some buying power for the days with the most volatility, just so you have some gunpowder ready for it. So let's look into the day. As you guys can see, what did SPY do today? So the S&P 500, well, bit of a muted day. Usually the day before big releases like that tend to be kind of muted. But if you're looking where the actual action happened today on SPY, don't forget, guys, three biggest components of SPY: QQQ, technology, XLF financials, and healthcare. So if we go down here, you'll notice that technology was weakest on the day. They were kind of pulling everything down. Apple, Microsoft kind of just ran down. Amazon as well. Apple, Microsoft, Amazon ran down this morning and kind of really didn't do much today. They kind of just had a really bad open, ran down to the lows of the day, and then just kind of hovered around the lows of the day. So technology was really not doing too well today. I think there was only about 80 or so names down on the entire S&P 500. So you had really good breadth today. The problem is that those names, Apple, Microsoft, Amazon, they have so much weight that they alone can keep the SPY muted. Even though 3/4 of the SPY was green today, they kind of, brought the whole index down, which is why you didn't see as much green as you should have. But more specifically, so you see technology was down, right? Technology was down today about 0.64% on the Qs. Financials, nice green day. Took it a little back there in the last hour of the day here, but as you can see, daily trend is rejecting off of the 26 EMA. So that's normal. We got a nice little confirmed daily uptrend here going. Let's see if we get some further follow through. Because so far, I mean, it's broken this level, but not by much before putting in a doji-like candle. So we'll want to see if it can kind of follow through, guys, or if it kind of gets caught in a little consolidation area, perhaps. Don't forget, very big earnings this week and next for the banks. So that will be the thing. If we're looking for a push, guys, back up in these levels, you're going to need these earnings to do it. As well, if you want to push lower here to maybe fill some of these gaps, right? Well, in my opinion, you are going to need the earnings to do it. So lots of volatility on the table for financials. Definitely something to watch for the tail end of this week and next week. Healthcare has been doing its own thing now for a better part of the last 2 weeks. As you can see, guys, we're kind of running into this really choppy area here. There's so many small resistances. Like, you can draw resistance here, 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 here. Like, it's just all over the place, right? So, usually when I see this, it's very tough to kind of grind a market higher through these. What you're kind of looking for here, you might want a little pull back towards these EMAs here, get some accumulation in. And then with the broader market, you want to kind of see them smash this whole zone in one time. Then it would really give me confidence, right? That a weekly move to the upside, can be confirmed and sustained, which would give us a weekly uptrend confirmation, right? Monthly, still looking all right on healthcare. I mean, this sector is strong, guys. Going into recessions, healthcare usually does outperform. It's a very, very defensive sector, and you've seen them kind of turn on the jets here after the banking crisis, consolidating down here. And now that there's been a bunch of recession talks and rotation perhaps out of technology, at least that's what has been the talk on the street, right? You can see sectors like healthcare and consumer staples really outperform. Like if we go to see something like McDonald's, right? McDonald's just outperforming. Dow Jones actually had a really good day today with the comeback of some names like, John Deere's been putting in a couple good days recently. Caterpillar's been putting in a couple strong days, right? So Dow Jones really did well on the day. As I was saying in the last couple of videos, right, this looked like a very nice cup and handle, very nice cup and handle pattern there. on the daily. So we're going to be looking for the Dow Jones. And I mean, guys, like on the Dow Jones, like these are your really boomer defensive names, right? With some technology in there. But I mean, that's the wrong thing. You're only, 7-8% off all-time highs. That's really good. In the midst of a potential recession, today you had names like CRM, Apple, dragging down that index. But for the most part, guys, I mean, the Dow Jones was really, really healthy day today. So, defensive stocks been performing pretty well. Growth stocks today in technology, not so much, but it's always good to keep that sector rotation alive. Now, getting into the Russell, IWM, Russell 2000, right? So, Russell 2000, we are still off of our lows. As you remember, guys, we've been kind of highlighting this range here, right, as our lower levels to be really watching out for. This is the area that I like to personally take a stab at owning the index on, but I always sell puts, right? Always be selling puts down here. Haven't had much of an opportunity since late last week to do so, because now the premiums are it's a bit better if I show it to you with IWM, right? So I really want to eye this 170, below 170, all the way down to 164 range. And as we pull down into this lower area here, that's when you usually get some really good premiums here. Now we're kind of a bit far away. Keep in mind that this is an index, so the premiums are lower. So you really got to catch it on a down day, preferably a day when the VIX is also pretty hot. So you're going to need a red day across most indexes, guys. If you get a minus 1% day on SPY and the NASDAQ, the Russell should be down 1.5%, sometimes a bit more than that. And that's usually when you can get some really good premium down here in this range. But for now, let's not get ahead of ourselves. For now, bulls are still trying to confirm a daily uptrend. Still have a bit of work to do here. As you can see, we're kind of in between these moving averages. Everything's kind of looking healthy, but a bit of a muted day towards the end of the day here. Not really many negative headlines towards the end of the day. We just got some profit taking towards the end there. I mean, these shorter time frame charts, right? We're still riding 12 EMA up. We're now above the 200-hour moving average. We haven't been above it since a while, right? Since February, we haven't been able to steadily hold above this. We had a chance here, couldn't get it done, but then again, this was the formation of our larger pattern, right? The formation of the daily higher low compared to this low down here. So we'll see now. Is this going to be the time that they can push above, hold, and try to create that new uptrend to get to the higher end, guys, of this massive range? I'm talking about trends and ranges here, but you can have a trend within a specific range. You just have to know that these are major levels to look out for, right? So for now, that's what we're looking out for. Just quick rundown again of the indexes. SPY still grinding higher here, challenging these resistance areas. Once again, we're going to need some bullish news on CPI if we want to smash this in one day, right? We're going to need some bullish news. NASDAQ kind of the same, grinding this EMA 12 up again, kind of setting a weekly bear flag on both S&P and the NASDAQ. So we're setting up good. Like if we get some bullish news on CPI tomorrow, the setup is good. We're so close to that resistance that with such a volatile day, that could be the thing that actually pushes us over, guys. So keep that in mind. Whenever you're looking to break ranges or you're near very, very high levels of contention and you have an event, that could be your catalyst. We could also just roll over with it, but I'm just saying, if you're bullish and you're expecting CPI to come in lower, that is what this chart is going to need to make that push through. Now, let's look at the major technology stocks on the day again today. Apple, as I was saying earlier, Apple didn't have too good of a day at all. It really started low, tried to come back, and then got rejected in the last hour of the day, closed near the lows of the day again. I mean, guys, on the daily chart, this is still a daily uptrend, right? Daily uptrend, still a decent amount of space. The problem is if you start coming down any further into here against this guy here, the most likely scenario doesn't become a V-shape to all-time highs. It becomes kind of a tightening range. We're going to need some more accumulation to come in there because the bears will have taken back too much of this move. And then you may be looking for some weekly consolidation, right? So you got to keep that in mind. Always do the inter-time frame analysis. Anything above anything really above this range here, right? The 145 to 147 range is a weekly high or low. I would like to see it stop right here, right? At this support line right here, which also coincides with the weekly 12 EMA. So let's see that on the level, right? That would be about 155-ish. As you see, 155-ish would be right around this guy here, right? So even if we go test this guy right here, we could still bounce back and still do this pattern and be fine, right? As long as we don't, as long as we don't start cutting too low into the weekly pattern, I think this chart is relatively fine. This is just further daily consolidation and a bit of weekly consolidation as well. Don't forget, guys, this has been now 3-4 beautiful up weeks in Apple, almost a month worth of gains. So, you got to give the sector some time to rotate. Microsoft, kind of in the exact same position, right? I'll start off on the weekly. Look how much space we have, guys, to set the weekly high or low. You would want to set it right above around here, right above the moving averages, because that would be around 50% of this entire move, right? It'd be just around 50% of that entire move, which would mean that bulls would still be healthy in control on the weekly time frame. Now, that's what we're doing, starting the weekly consolidation, right? If you want to draw some trend lines and stuff like that, you could do something like this, right? Set a nice little trend line here. This would bring us down into here, right? And then start going back. That would look, fairly good. It would be in line with the trend lines, be in line with these moving averages here, allow the time for the weekly time frame to consolidate, and the chart would still look healthy at this point. We're still in daily consolidation. Anything above here is still our daily high or low. Still a daily high or low, right? So these charts, the reason I'm going over them quickly, I don't want to repeat myself too much over the last 2 days, 2, 3, 4 days. Bull's still in control. As long as we're still in daily and weekly uptrends, I don't see any sign to be nervous on these charts, guys. Like I said, I wouldn't be buying before we confirm this weekly consolidation a bit more. But that's it. Let's take a look at Amazon here. Amazon is now coming into my target area, which I really like writing options in. So I was looking at the 97s today, and I did do a 97 put for this Friday, which was it paid me about 51 cents in premium today. So 51 cents in premium, that's the only position I took. As you guys know, yesterday I was saying I took ON semiconductors off the table. I took most of the Tesla. I actually had 5 contracts on Tesla. I only have 1 coming into tomorrow. Took them mostly all off the table yesterday and today with good profits, 75, always between 75, 85% profit, guys, do I close these? And IWM, we're now fully out. So I was looking to add 1 position. I added some Amazon. I liked the level in the morning. They kind of got really beat up. So I was looking at, right around here, right when we were getting really crushed down on these lower time frame levels in the RSI. I wrote them at about 99.60, picked up about 51 cents for the puts for Friday. We got some recovery late into the day here. So my puts are now, I think the last time I checked, they're about 37, 38, maybe 40 cents by the end of the day. Who knows? But we're up about 20% on those. Didn't want to write too much because of tomorrow. So I just wrote a few contracts, not fully open on the position yet, but I really like this little range here that we got going because we are still in a daily uptrend. So I wrote my puts with the premium to be right in line with this support. You see this yellow line here? That's exactly where my assignment break-even price would be. So that would mean that it's still a great level, still consolidation level, right? This is our higher low, right? Higher low, higher low. If we set a higher low right in this range here, nothing wrong with that. Like I said, this chart, Apple, Microsoft, Google, Amazon, they're kind of all doing the same thing at the same time. We're in daily and weekly consolidation at the same time. They are weekly bull flags and they are daily consolidations with higher low off the moving averages as well. Nothing to be alarmed nothing to be alarmed about yet, guys. This is just normal consolidation. It has to happen if you expect to push higher, right? Especially leading into earnings season. So Google, exact same scenario, right? You could pull up Apple, Microsoft, Google, Amazon. They're really doing the exact same thing. Tons of space from this weekly higher low, right? This weekly higher low. Tons and tons and tons of space to pull back on the weekly, set a higher low, and continue the trend to the upside, guys. So that's what I'm looking for. Even if it's been, a few red days in a row here, still riding the moving averages higher. Anything above this guy here, above $100 pretty much, is a daily higher low. Probably anything above, anything down here, which it's funny, right? If I draw this line and do this, see on the daily, this would pretty much, it would make like maybe a double bottom, or they would slightly undercut the daily higher low. But at that point, it would still be weekly consolidation with a bunch of space. So I'm not putting too much impact here on, if we lose this guy, are we immediately going back down there? No, it's not how it works, guys. The most likely scenario off a large move like this, especially in a weekly uptrend, is the weekly higher low. So just be patient with it. I haven't been writing many puts on big tech for that same reason. I'm waiting for the weekly consolidation. And the way that I know that's coming is that in the past few days that tech has been weak, the other sectors have been rotating. XLV, healthcare, and financials have been lifting the weight while QQQ drops, which gives us a really healthy S&P 500 chart, right? S&P 500 is not really moving. It's not losing anything. It's consolidating near the highs here. So that's health. As long as I keep seeing healthy rotation, guys, the bulls remain in full control. Tesla, start of the day down once again. Actually, no, sorry about that. I was looking, start of the day up. So this is exactly when I started closing two of my last contracts on Tesla. I'm letting one ride, the 167.5s, which we wrote for about 0.7% for the week. And Tesla kind of did nothing all day, right? Open high, came back down, came towards the low of the day, and then never broke either the high or the low of the day. So Tesla is one of those stocks that loves the volatility. It's waiting for CPI. That's why you have kind of a weird little candle here. It didn't really do much. It fared better than other big tech today. But to say it did something, guys, it really didn't do much. Got rejected off the daily moving averages here. We're still within this tightening range. Right? Massive tightening range. And tomorrow, who knows? Let's see if we get further confirmation, right? So this is we've now confirmed an hour. It's ugly, but it is at this point an hourly uptrend. It's an hourly uptrend. To confirm a 4-hour uptrend, we need a slight little clarification here to confirm the 4-hour uptrend. Daily time frame. It's kind of a range. You could say, guys, that we lost the daily uptrend, right? This guy compared to that guy. But in all reality, this is the problem with conflicting time frames sometimes. So when the time frames are conflicting 4-hour daily, when in doubt, zoom out, just go a bit higher. You can see we're still in a weekly uptrend, and now we're kind of in a tightening range of that uptrend. So it's still weekly bullish, but we're consolidating towards the top end of this move here. So we really want further continuation, especially into the monthly. This is the process of setting potential monthly higher lows, right? Monthly higher lows. If we can then break this range with the monthly candles leading into May and June, if we get some good earnings here and the market continues to the upside, this could reset the monthly uptrend for Tesla, which we haven't had truly since, at this point, almost a year and a half ago, right? So Tesla, not much on the day today. I was able to close out my contracts. And that's the beauty, guys, of writing options, right? Is even when the market doesn't really do anything, I'm still making profit. I'm still banking my theta decay, the premium decay, right? So even when the market doesn't move, as long as it doesn't move too violently towards the downside every day, I'm just pocketing the premium. The story of the day, however, though, I'm not going to say I told you so, but we've been calling this now since last week. Ethereum made this break. I was kind of looking for this tightening range, guys, right? This wedge pattern to the upside, but we'll see if that plays out. So just to come back, right? Ethereum was holding this range. It broke out first. Bitcoin hesitated and only yesterday and today started breaking out, right? So we've been looking for that. We've been looking for that for the past week and a bit. And after Ethereum did it first, I kind of assumed that Bitcoin would follow, right? Why? Because of ETH BTC. ETH BTC was crushed all the way down here, right? If we look on the weekly, it's easier, right? Crushed this level right here. We came back. We tested this level now as resistance. And then there was follow through to the downside, right? Follow through the downside. So this is a weekly downtrend on ETH BTC, the dominance, aka if you want to know if Bitcoin or ETH is more dominant, this chart going down shows you that ETH is less dominant than Bitcoin, so Bitcoin is dictating the moves. So when we got our bounce up here, this whole bounce on the dominance chart is the exact day that Ethereum broke out. The exact same days, right? When Ethereum pulled back and Bitcoin did nothing, I knew, we're going for a downswing in ETH BTC. And I knew that that meant either one of two things was going to happen. Either both ETH and Bitcoin were going to drop, or they were going to rotate, right? ETH would kind of hold steady and rotate to the downside, and Bitcoin would make its break. That's exactly what happened, guys. We got some beautiful follow through. Next levels, let's not get too ahead of ourselves. Next levels, as we've been saying, about 31.5-ish, 30 anywhere between 31.5 and 32,000. And then the next level after that is 35. But let's focus on this area first, right? Need to be taking out this whole range here first. And then we'll see. But for now, bulls are in complete control. I wouldn't be opposed to see some little retest here before a further breakout. That would be perfect normal market structure and market movement. 4-hour RSI, massively overbought, but it's crypto, guys. These shorter time frames can stay overbought for quite some time, right? Daily, barely overbought. Weekly, not overbought yet, guys. Not overbought yet. The 4-hour is. The hourly, with all this consolidation, they were able to really cool off 1-hour chart. So I like to see that. So bulls still in complete control. If you're looking to enter a position up here, if you're looking to, I wouldn't be going long up here. But if I was looking to build a position in Bitcoin, what I'm going to be looking for is if it comes down here, hesitates, uses this massive resistance level at support, and the broader markets are fine. Keep in mind, guys, CPI tomorrow, right? Very, very big day. So if it's a red day in the markets, it might also be a red day in Bitcoin. Bitcoin also may love inflation because people may flock to Bitcoin as a potential safe haven. These narratives go either way with Bitcoin sometimes. Sometimes Bitcoin is an inflation hedge. Sometimes it's not. I can make an entire video on that, but that's not the purpose. I'm just saying, guys, I don't personally like buying after the rise. Whatever you do is up to you. Obviously, this isn't financial advice, but, I'm the type of person that when a breakout does happen, I like to see a retest and a confirmation before opening up a potential other position. So, Ethereum still consolidating, still grinding up our 12 EMA here. Probably kind of waiting for Bitcoin to decide what it wants to do. If Bitcoin consolidates a bit further, we may get Ethereum to run. They may interchange like that. They may run together. They may run separate. We really need to see. But for now, moral of the story, bulls are in complete control of most of every single time frame from the weekly down, right? And now we're even delving into the territory of resetting the monthly uptrends. So that's going to be very, very notable. Look at these MACDs on the monthly. All right. Notable. Definitely very notable. So going into the plays that I'm looking for, guys. Well, sorry about that. As I said before, most of the plays have been taken off the table pending CPI. I did open that Amazon short put, the 97s, for about 51 cents, which is just over 0.5% a week for the remainder of the week. I'm going to be looking for opportunities tomorrow. But one that I did want to bring up again that I was talking about yesterday, right? Estee Lauder. Estee Lauder on the call side. Put a little arrow here to let you guys know exactly when I called this on yesterday's video, 10th of April, right? Just keep an eye on this. Keep an eye on this pattern. As I was saying yesterday, guys, these companies are usually recession-proof. They're not recession-proof, but they're very, very resilient in the face of recessions, right? Because you guys have to understand that when we go into recessions, there are certain products that consumers, it's not that they can't do without them, but it'll take a lot before women specifically stop doing their makeup or stop buying makeup products. And good thing for Estee Lauder is that they have a lot of different product segments, guys. They have the high-end stuff, the medium, and the low-end stuff. So even if their consumers substitute from the higher-end brands that they own, because it's a conglomerate at this point, Estee Lauder owns so many different brands. So they own the high-end brands that may cost you, $16 for one bar of lipstick or $30 for one bottle of eyeliner or mascara or something like that. But they also own the lower tier brands that could be substituted. So if people have less purchasing power and they say, I can't spend $30 for the mascara that I usually use, I only want to buy this one for $10, $11 or $8, they control those segments as well, guys. So even though people will potentially be substituting products because they're earning less or maybe they lost their job, they'll still be buying these things. Like I said, there are some products that people will continue to use despite the fact that you're in a recession. And that's why the beauty segment usually always fares well. So this is one that I'm looking for. We're now above the 200-week moving average. Once again, you've barely, but yes, using it as support. And look, all the previous times that this happened, guys, going back over 12 years now of data, right? 12, 13 years of data. Every single time that we test this 200-week moving average, we usually are able to hold it and push higher. So keep that in mind, looking out for this inverse head and shoulder on the weekly. These longer term patterns take longer to play out, but I'm personally eyeing the top end of this range. I showed you guys what I wanted to do with the call side, right? I was buying the 230 calls for June, which were about $27 a piece yesterday, and selling the 270 calls, same expiration. It's called a vertical call spread. It's a debit spread since you are paying for it. So you pay $27 for the long call, the 230, and then you sell the 270 for about $3, which gives you a slight discount. All that means, guys, is you would be buying 100 shares at 230 and then selling them at 270. That's all that spread means. You're buying 230 and you're selling them at 270. So it kind of puts a cap on your potential profit, but that's okay. I'm eyeing that area anyways. 270 is pretty much the top end of this head and shoulders. Am I going for the moon here? No. I'm just playing a defined range with a defined strategy, and I'm using the options because it's a replacement for the shares. 100 shares of Estee Lauder would cost $240 times 100. That's $24,000, guys. That's a big position. This call option only cost me $2,400. So I have the same exposure, exact same exposure as I would with 100 shares, right? However, it cost me 1/10 of the price. And since I'm doing it 2 months out of the money, and since I'm also using very, very low, and it's a very low implied volatility. So as I was explaining yesterday, guys, there's only about a 1.5% premium on this option, right? On this option play. It's not a lot of money. It's not actually, sorry, it was the 220s and not the 230s. There's not a lot of premium on this play, guys, right? In terms of options premium, what the added premium the market maker puts on it. So the option is almost trading for intrinsic value. And when that happens, guys, it's almost like buying the shares. You're not paying too much money for the option. And that's what I love. When you can, it's basically like getting leverage almost for free, for a tiny little premium. And that's what I like. The worst thing that I hate doing is buying a call. Let's say I buy the 220s, right? And let's say for some reason, because the implied volatility is high, the price is 240. I'm buying them at 220 for 2 months out. Let's say they should be like $22, $23, which would mean my break even is 243 instead of 240, right? So you're only paying $3 in premium. The worst that can possibly happen is if you pay like $35, $40 for that option. And then your break even is something ridiculous, like 250 or 260. And it's like, 5-10% away from current price. Your break even is too high. And if the stock doesn't move, your option just bleeds out and bleeds out. I hate that. I'll make a video on this later. but I'm just kind of explaining this Estee Lauder play. So that's one of the long-term ones. As you guys know, I've also been talking about Costco, right? Costco, lower end of this range, right? This very, very big tightening range, almost 2-year tightening range at this, well, 1.5-year tightening range at this point, right? Now, once again, we're coming to the upside. Are we going to continue to tighten up more? Or are we finally going to break it to the upside or to the downside? Don't know. But one thing's for sure, the volatility, guys, is coming back. The volatility is coming back tomorrow with CPI. We'll see how it does. I will update you guys tomorrow. I'm sorry I can't come to the table with more plays than that, but you guys know what I'm looking at. Looking at big tech for the weekly retests. I'm also looking at Tesla, 165 to 170 range. Another one that I can leave you quick with, PayPal. PayPal, this stock has been stuck. That's previously when I sold it. So I guess you guys see where when I get assigned things and then sell them back for heavy premiums. So this stock has been making the tightest flag, right? Usually these patterns tend to break bullish. They tend to break bullish to the upside, okay? They tend to break bullish. I've been watching this now for a very long time. I've been writing some very cheeky 72 puts almost every single week now, guys. Not gonna lie, like almost every single week, right? 72 puts, 71s. This area right here is my, oops, sorry guys. This green box here is my liftoff zone. Anywhere between $50 and $70, in my opinion, is deep fair value for PayPal. They've had their struggles in the past. The reason that they came down a bit was their whole, they were slightly overvalued coming into last year. The entire fintech space was, as a matter of fact. And unfortunately, PayPal was the recipient of some bad news like that. But what kind of makes it worse, guys, is they put in a bid, I believe, last year to try to buy Pinterest, and the markets really didn't appreciate it too much. So that's why PayPal kind of got beat down pretty hard. But this company, the analyst expectations is that this should be trading in the 90s, right? Most of all analyst forecasts say that this should be trading in the 90s. So that's the reason why I'm looking to write it down in this range here. If I get assigned, I will gladly hold the shares, especially if my risk to reward, right? Especially if I can make, if I'm maybe going down $10 here to the downside and my upside is $20 to $30 to the top end of this range, guys, that's really good risk reward. And once again, PayPal, solid company. I don't mind owning this company. And that's rule number 1, guys, of writing puts. Always do it on companies that you want to own. Simple as that, right? So that's it for today's video. I will check in with you guys. Can't wait to see what we get for CPI. I will be in New York City tomorrow through Friday, but I'll still be putting out some videos. So hopefully we get some good opportunities after CPI first thing in the morning tomorrow. And yeah, maybe if we start off red and then go green, need some red to write some puts, but we'll see. We'll see. It might just bring up the volatility high enough to where we can write some good positions on some of these stocks, right? So stay tuned. If you learned something, if you appreciated my input, if you figured out some plays that you may not have seen because I talked about them or something like that, consider liking, consider subscribing. I hope you guys had an amazing day, and I love you all. Happy trading. See you tomorrow.